Alphabet, the parent company of Google, reported earnings after the market closed on Tuesday, and the stock's actually down about 4% as I'm recording on Wednesday. Kind of a crazy reaction from what I thought was a phenomenal earnings report. The company's growing in almost every area. I did a video previewing earnings, highlighting that I was really looking at search. Is that core business being affected by things like artificial intelligence and all the other pressures that investors were worried about 12 to 18 months ago? It doesn't appear that's the case. Growth is re-accelerating with the search business. It seems like everything is going well across the board, but the market's reaction is obviously saying something different. So I want to go through the numbers and the valuation on the stock. Because to give the lead away here, this is a company that's growing revenue at 14%, and the forward PE ratio for Alphabet is just 22. So this is getting to value stock territory from a growth stock. So just phenomenal numbers. I think this is one of the best buys in tech today, but I'm going to get into the numbers that back up why. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get to some of the high level numbers. So this is the second quarter report, and I'm going to bounce between this and some charts that put some context into where these numbers are from a little bit longer term duration. But you can see that revenue was up 14% to $84.7 billion, just a massive business. Operating income was up to $27.4 billion, a 32% margin. So an incredible margin for a business of this size. And net income was up $5.5 billion to $23.6 billion, or $1.89 per share. These are the segments that Alphabet breaks out. The first is Google Search and Other. You can see that growth was phenomenal there. I'm going to put up a chart here that shows a little bit more context. You can see that this was a growth business through the early part of the pandemic, and then it's actually Apple's app tracking transparency that affected growth in late 2022 and into 2023, but that growth has re-accelerated recently. So this isn't going to be a massive growth business. We're not going to be growing 20-30% at this stage given the scale of the business, but still very, very profitable and a solid growth business. YouTube ads also beginning to grow again, but this is actually where investors were a little bit disappointed in the results. $33.9 billion in revenue. This is where I think you get into the case where analysts are trying to break down exactly what they're expecting from each one of these segments. And if they get any one of them wrong, and analysts are just making an estimate of what they think the results are going to look like, if they get any of one of them wrong, investors can get disappointed by that. So that was one of the things I saw in the reaction was that rev growth in YouTube was a little bit disappointing. I don't think there's anything jarring here from YouTube, and this is also not the real cash cow for the company. So still a growth business, still doing relatively well. Google Network down a little bit, but advertising overall very, very solid. The other big piece of the business that always gets a lot of attention is Google Cloud. And this is where artificial intelligence is housed. So this is why this has been a focus for the last couple of quarters. Seems like things are going extremely well in the Google Cloud. Revenue is up 29% for Google Cloud. And you can see from this chart that this has just been a steady growth march for the business since late 2019. The compound annual growth rate is 36%. This chart shows quarterly numbers. So now doing over $10 billion a quarter in revenue and over $1 billion in operating income for the first time. Over a 10% operating gross margin as well. So the profitability of this business is really starting to be meaningful for Alphabet overall. Still $1 billion, not going to be the biggest business, especially when you compare it to Google Services, which did almost $30 billion in operating income. But if this is a business that can continue to improve at this rate, can continue to grow in that 20 to 30% range, this will be a phenomenal growth driver long term. I'm going to go down to the balance sheet here because Alphabet has always had a really strong balance sheet, now a little over $100 billion in total cash on the balance sheet, but that was actually down despite the cash that was generated by the business. That is because Alphabet has bought back about $31 billion of stock so far this year. You can see that here in the number of shares outstanding, declining by nearly 300 million over the past year. And then you see that in the cash flow statement. This is repurchase of stock in financing activities, $31.4 billion so far in the first half, year to date in 2024. For just the last quarter, $15.7 billion of stock was repurchased. So starting to really buy back stock. They are paying a dividend now. So those those returns to shareholders starting to be pretty meaningful for investors. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. A couple of other things I thought were really notable. They did say that they were going to invest $5 billion more in Waymo. Seems like that business is going well. We didn't hear a lot more about what the strategy is going to be for Waymo going forward besides just expanding what they're currently doing. So new vehicles would be one thing I would like to hear about, adding more cities. But it does appear that the technology is going well. They're starting to build a little bit better brand, have more awareness. So that's potentially a business that could be spun off and operate on its own once it gets to sustainability. We're not quite there yet, but Alphabet is investing in that business. So that's one of the things that makes me bullish about Alphabet is the optionality that they have in a company like Waymo. But all of the other parts of the business, the core business, the search business continues to do well. YouTube continues to grow. I think there's more options for YouTube to continue to grow, not just in the core YouTube business, but also in more traditional media. So YouTube TV, layering on more services there. But again, I would rather see them growing in the search business than in YouTube. Then in the cloud, you have significant growth, and it seems like Alphabet has actually staked out a really nice place with its own custom chips that it's using. They have their own models. They at least have a differentiated business model in the cloud and in artificial intelligence against some of the other companies like Meta, like Alphabet, like Microsoft, like OpenAI. So there's at least differentiation. Now we will see if the infrastructure advantage that Alphabet has built over really the last 20 years is going to be a huge advantage for them in something like artificial intelligence. Again, I think it will be, but those numbers need to get significantly bigger, $10 billion in quarterly revenue. Wouldn't be surprised if you could grow that in excess of 20% for the next 5 to 10 years, given a lot of the bullishness on artificial intelligence. So the valuation, I think, is what is become really attractive for investors right now. To just give an update on that, as I'm recording, PE multiple is 25. Now, analysts have not updated their estimates after the current quarter, so those may increase, I would think, but the price to earnings multiple, 21.7 according to FinChat. Enterprise value to sales is only about 6, and even price to free cash flow on a next 12-month basis is under 27. So I think everything is pointing in the right direction for Alphabet. They're growing in all the right places. Doesn't seem like artificial intelligence is going to be a disruption to them. In fact, it's probably going to be what's known as a sustaining innovation, or will make its current business even stronger and even layer on some advantages with the Google Cloud. So I love where Alphabet is sitting today. Definitely not a stock that I would be selling after that earnings report. The one that I'm considering buying a little bit more. I own this in the asymmetric portfolio, but would definitely be looking to add it over the next few weeks if the current weakness in the stock price continues. But let me know what you thought about the quarter. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.